Alright, so hello everyone, and in this video I'll be answering some of your burning questions on various topics. So I just posted this question 11 hours ago where I said that, you know what, send me your most burning questions and I will answer the top 30 questions. And I've compiled these questions. In fact, it's about 37 questions that I've put into the list. So again, I've grouped these questions into different categories, and I'll answer them to the best of my ability, and I hope that it helps you to gain more insight into the world of investing and trading. Alright, so first, let me answer some of the personal questions. First question would be, big fan here. My question would be, number one, are you beating the market this year? And what's your secret formula for beating the market? I think I'm beating the market this year. Let me just double check and look at my latest performance. So one of the great things about using my broker is I can look at my overall performance year to date really quickly. I can look at the account management. Log into my account and I can see my performance versus the S&P 500. So you can see year to date, my performance is 26% from January to the mid of October. So that green line is my portfolio. Up 26% versus the S&P 500, which is up about just about 21%. So yep, I'm still beating the market this year. So what's my secret formula to beat the market every year? Well, really simple. I never buy and sell based on emotions, based on predicting where the market's going, because no one can predict the market. And it's not based on listening to the opinions of people on the news media. So my investment decisions are based on a strict set of steps, which I call the 8-step value momentum investment formula. And when I'm trading, I also follow a strict 8-step momentum trading formula. So again, these steps are based on fundamental analysis and technical analysis. Okay, question number 2 is from Warren. I know you prefer solid businesses with great track records, but do you ever get FOMO, fear of missing out, when you see unprofitable growth stocks go crazy, right? So there are some companies which are not making money, but the price goes up like crazy. Do you feel like buying them? Do you regret not buying them? The answer is no, not at all, right? And that's the key. The key to becoming a consistently profitable investor or trader is to trade and invest with zero emotions, is to have this ultimate discipline, right? So if there's a stock which doesn't meet my criteria and I don't buy it and it goes up 500%, fine, I'm okay with that, right? It doesn't affect me at all. It's kind of like, every month there are people who win the lottery, who win $100 million lottery. And do I feel bad that I didn't buy the ticket? Do I feel regret? Of course not, because it's just not my game. So I don't care how much people are making. What matters is what I'm making with my own strategy. So you got to have that discipline, okay? Next question, Adam, do you still not believe in Bitcoin? Right. So a lot of you would know that, I don't invest in cryptocurrencies at all. I don't buy Bitcoin or any of those stuff, right? And the reason is very simple, that, to me, cryptocurrencies and like gold and things like that, they are unproductive assets. They are assets that don't generate cash flow. So when something doesn't generate cash flow, there is no intrinsic value, right? There's no way to calculate the intrinsic value of the asset. And if I can't ascertain the real value of an asset, I don't feel comfortable buying it, right? But things like crypto and gold, they have what we call psychological value, right? It goes up because of people's sentiment. That's why it goes up, right? Could you make a lot of money from gold, a lot of money from crypto? Of course you can, by focusing on, again, the technical analysis, right? So I know there are people who make a lot of money on crypto and gold, but it's just not my style, right? So we all have different styles. So I feel more comfortable buying productive assets that I can value, like businesses, which are basically stocks and real estate, right? But of course, you can make a lot of money from crypto as well. And I've got friends who make a lot of money from crypto, and that's great for them, right? And do I regret not buying it? Do I want to buy it? No, because that's not my style. Okay, so the next set of questions are regarding predicting the stock market. Where is the stock market going? When's the next crash? How big is the crash going to be? So for example, FinTech here is asking, will the market be stagnant after the bull run for 3 to 5 years? The next correction, how much correction do we expect? How do we anticipate a market crash of 20% or more, which is how do you anticipate a bear market? What would happen in the next 3 months in the market? What's my outlook for 2022? And will this market be strong in the next following years? So again, all these questions are about predicting where the stock market is going. And I hope you guys know by now that nobody can predict where the stock market is going. It is impossible. No one can predict it. All right. And anyone who tells you that they can predict where the stock market will be in 3 months or 6 months or 1 year is full of shit. Okay. So in the short term, the market is totally unpredictable. All right. The good news is whether you are an investor or trader, to make money consistently has nothing to do with predicting where the market is going. I've got no idea where the market's going. I can tell you that, right? But there are a few things I do know. The first thing I do know is that in the long run, the market will always go up in the long run, all right? But in the short term, in a few months, in 1 or 2 years, who knows where it's going to go, all right? I can't predict when's the next correction. But what I can do is I can look at the current trend of the market. And based on the current trend, we can anticipate the probability of whether prices are more likely to go up or go down based on the trend. The next thing is, let me show you a few statistics. So again, let me show you what I do know about the markets. And this is all you need to know to make consistent profits. Number one, you got to know that the stock index always goes up in the long run. So for example, if you take a look at the last 120 years of the Dow Jones Index, you can see despite problems in the world, you've got World War I, the Great Depression, World War II, you have got Cuban Missile Crisis, OPEC oil embargo, Black Monday, Asian financial crisis, dot-com crash, US subprime mortgage crisis, European debt crisis, US-China trade war, COVID-19 pandemic. Despite all the bad news, the stock market always goes higher eventually, right? So that's the first thing to understand. The second thing to understand is that the stock market doesn't go up every year. There are years the market will go up, there are years the market will go down. But what's interesting is that the market goes up a lot more than it goes down. So if you take a look at the last 70 years, this is from 1951 to the end of 2020, you can see that out of 70 years, there were 18 negative years. So 18 out of 70 years, the market went down. That's 26%. And 51 years out of 70 years, the market went up. That's 73%. So what does that mean? So that means that the probability of the market going up on any given year is 73%. So whenever people ask me, Adam, where do you think the market's going next year? What's your outlook of the market next year? I always say the same thing. Always say that the stock market's going up this year or next year, because I know if I say that, I will be right 73% of the time and I'll be a genius, right? So that's my secret. And the other thing to also understand is if you look at history of the markets, you realize that the stock market is in a bull market 91% of the time. Since 1935, there have been 78 years of bull markets and 8 years of bear markets. So that gives you a 91% fact that we are always in a bull market 91% of the time. And that's why if you buy great companies, you just have to hold them. They'll always go up in value. All right. Now, again, a common question people always ask is, Adam, when is the next crash coming? And how deep will the crash be? And that's, again, something that no one can predict. But what I do know from history is that for the last 70 years, since 1951, you can see that the market drops 5% about 3 times a year, right? So every year, the market will drop at least 5%, statistically, right? And every once a year, the market will drop 10%, okay? And once every 3 years, the market will drop 15% or more. And how often do you get a bear market, which is a drop of 20% or more? The answer is once every 6 years. That's it. That's all you got to know. So remember, on average, once every 6 years, we will have a bear market. The market will drop at least 20%. Here's the thing, right? Every year, people will predict that this year the market will crash. This year the market will crash. They say that every year. Are they right? Well, they'll be right once in 6 years, which is 16%, right? But when that will happen, no one knows. So all we got to do as investors is not to predict when the correction will happen. All we got to do is to ensure when it happens, we buy the right companies at huge discounts, right? And as traders, what we do is, as long as the market is on an uptrend, we trade long. The moment the market reverses into a correction, we trade short and we just follow the trend. The trend is your friend. That's all you got to know. Okay, the next three questions are on the big picture of the market. All right, so Gado is asking, Adam, we are in the most speculative market in history, driven by millennial, lazy investors who love meme stocks. Do you think this represents a change in the way we value companies, right? So, well, let me just say that, do I think that the whole market is speculative? No. In fact, in the entire market, there's only a small part of the market that is speculative, which are the meme stocks, which are the emerging tech stocks. And this represents a very small portion of the market. So I think the overall market is not in a bubble, right, to answer that question. So no, it does not change the way we value companies. We value companies the same way, which is using a discounted cash flow model, which is the same way which I value companies all the time. Second question would be, Adam, do you think the markets are too high and may we see a big downtrend till the end of the year? Okay, so two parts to this question. Do I think the markets are too high? Like I said, if you look at the overall market, I don't think the market is extremely overpriced. I don't think so. To me, the market is fairly priced. There are some stocks that are way overpriced, okay? Like Snapchat, or even Tesla, or some of these emerging tech stocks like Teladoc, they're way overpriced, right? But those again represent a small part of the market. But I think that a lot of the market is fairly priced, and there are companies which are still underpriced. Like for example, Facebook is underpriced, Amazon is underpriced. Okay, if you do a discounted cash flow analysis. So the second part of the question is, do I see a downtrend to the end of the year? No. I don't see that. Again, no one can predict for sure, but based on the trend, currently the market's on an uptrend. And the trend is your friend. As long as we remain on an uptrend, prices will tend to go higher to the end of the year. So again, if you take a look at the chart of the S&P 500, you can see that we went through a correction in the last month, right? There's a short-term downtrend, but that has now reversed back into a short-term uptrend. So it's a short-term uptrend, and the medium-term to long-term trend is still up, right? The 50 moving average is above the 150 moving average. Prices are above the 200 moving average. So it looks like we are on a very, very clear uptrend, likely to keep going higher to the end of the year. And again, there's also a seasonal pattern. So this is the first year of the new presidential cycle in the US. And based on historical seasonality, you can see that, let me just open that chart over here. There we go, right? So this is based on the first year of the presidential cycle. And based on this seasonality, you can see that August, September, October, they tend to be more bearish. And towards the end of the year, November, December, the market tends to rally to the end of the year, to what we call the Santa Claus rally. Next, Stephen is asking, Adam, has the Chinese stock market bottomed, and is it in accumulation stage? Well, based on the technical charts, it looks like the Chinese stocks have more or less bottomed. Yep, it looks like Alibaba has bottomed, Tencent has bottomed. Like I said, about 30 days ago, the end is near for these Chinese sell-offs, right? So again, we can't predict for sure, barring the Chinese government coming up with something new and new regulations. It looks like Chinese stocks have bottomed, and it looks like we could be rebounding back from here on, all right? Okay, now the next set of questions are based on specific stocks and ETFs. So first question, how is Amazon? It doesn't perform very well this year compared to other tech stocks. Do you feel it's a good time to buy it, all right? So to me, Amazon's a great business. It passes all my steps of a great business, and it's still currently undervalued. It's been in a consolidation pattern, so I've been buying consistently, and the intrinsic value is about 3,006. But there are some analysts that rate it to about 4,000. So if you ask me, I think Amazon is slightly underpriced, still slightly underpriced. And when it explodes, it would go up to above $4,000. Exactly when, I'm not sure. Could be end of the year, could be next year. But Amazon is one of my core holdings in my portfolio, and I love the company, right? Yago is asking, what are the best 3 small cap companies right now you're buying or would buy? None of them, right? Because it's not my style. I don't like to buy small companies because they tend to be very risky. I like to buy huge companies that are impenetrable, they've got no competition, and I buy them at huge discounts. So not my style to buy small companies. Not that it's wrong, not that you can't make money, you can, just not my style, right? Next question, Hari Fan is asking, would it be good to buy great undervalued company staples like Johnson & Johnson soon before the rest of the market starts weakening? Again, Hari Fan, we can't predict when's the next bear market. But like I said, a bear market happens once every 6 years, and the last one happened last year. So I'm not surprised if it'll be quite a number of years before we get the next bear market. Now, having said that, Johnson & Johnson, I think, is slightly undervalued right now. And J&J is a low growth but very defensive company. And it's always good in your portfolio to have some defensive companies in healthcare as a good diversification within your portfolio. All right. So I have J&J as well in my portfolio as a defensive company, right? Hassan is asking PayPal and it's buying Pinterest. How's that going to affect their perspective value, right? I think it's good for Pinterest that PayPal is buying it, but is it good for PayPal? Not too certain, right? Now, I never invested in PayPal and I never intend to invest in PayPal because I don't think that they've got a very, very strong economic moat as compared to Visa or MasterCard. So I'm not a PayPal fan. And not only that, but I think the shares are way overpriced. It's way too expensive to invest in PayPal. Next question, Adam, should I still buy Alibaba over $177? And do you think it's the end of the downtrend? Good question. So as you guys know, I've always said there's nothing wrong with Alibaba. It's a great business. Nothing wrong with the business. Although the growth may slow down in the short term, but it's still a great business, right? And Alibaba's worth at least about $300. So at $177, it's still very undervalued. So from a fundamental perspective, it's still a good deal to buy Alibaba at this price. Now, let's take a look at the charts. If we take a look at the daily candles, the short-term time frame, you can see that it looks like it's beginning to change trend from a downtrend to an uptrend, but I wouldn't say the uptrend is 100% confirmed. Well, first of all, let's take a look at the price action. And again, a downtrend would be lower highs and lower lows, right? You can see the wave pattern, right? You can see this wave pattern over here, like that. So it makes lower highs, and lower lows. So for change in trend, we want to see higher highs and higher lows. So the good news is right now we have jumped up and this has made a new high. So we have made a higher high, right? But we need to see a higher low to confirm the uptrend. So in other words, we've got wave up, wave down, wave up, wave down. Now it's a wave up, right? So we got to make sure that the next wave down doesn't go below this guy, right? So after a wave up, we should have a bit of a pullback. So it could pull back here, for example. Let me just kind of like erase this, okay? So the next wave down, ideally, it should be above the 50 moving average, right? So a wave up, wave down, and then it continues the trend up. So as long as it makes a new higher low that's higher than this low and a new higher high, that will confirm the reversal of the trend. So I'm watching that really carefully. Now, you can also look at the moving averages as a confirmation. So you can see that right now, the 20 moving average, the red line, is below the 40 EMA, right? It's going to kind of like cross. So the moment the 20 EMA crosses above the 40 EMA, that confirms the new short-term uptrend. Okay, and when the 50 moving average, the blue line, crosses above the green line, that confirms the medium to longer term trend, and that would be a 100% confirmation of the uptrend. So for now, it's like getting there, but not absolutely 100%. But if you are an investor and you're looking to hold Alibaba for the long term, nothing wrong with buying it now, because fundamentally it is undervalued. And if you remember what I said in my last video on Alibaba, I said, hey, if you take a look at the weekly candles, the longer time frame, I said that with this bullish engulfing pattern, that is a pretty strong signal of a reversal up. And it looks like it may be happening. So we've covered half the questions, so we're going to stop here and join me in part 2 of this video where I'll cover the other half of the questions. So be sure to click the like button and click the subscribe button so you get the first alert once the next video is out. So may the markets be with you, and I'll see you in the next video. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.